Thank you, Colin. Hi everyone, it's great to be here today and to see so many familiar faces. Before I get started, I acknowledge the traditional owners of the land on which we are meeting, the Wurundjeri people. I pay my respects to the elders past and present. I also acknowledge Sir Avi Parvo, patron of the Melbourne Mining Club. Being a Fremantle boy, born and bred, a few months ago when I was considering the lead up to today, I was hoping to gloat about my beloved Dockers to a Melbourne audience. However, going on current performance and with a wooden spoon on the cards, I'm looking forward to some high quality priority draft picks. For a number of people, you may not realise that at South32 we've just had our first birthday, and today I'd like to share part of our journey with you. It's fair to say that it's been an incredible year. While in many respects it's a year that's flown by, for me it's a journey that began more than 3 years ago. The demerger had a simple rationale: to split the core and non-core assets of BHP Billiton. It would allow BHP Billiton to focus on their gigantic assets with 100-year plus years of resource life, and give South32 the opportunity to focus on the operations that, whilst high quality, were not on the same scale in terms of size and not well understood. In theory it sounds pretty straightforward, but in reality it amounted to 22 months worth of hard work, involving more than 1,500 people, thousands of process steps, and more than 65 government and regulatory approvals across 6 countries. When South32 listed last May, it was one of the most complex demergers in mining history. It wasn't easy, but was it the right thing to do? Based on our results so far, I'd say yes. Yes, it was. On numerous occasions I've been asked why I chose to move to South32. For people who know me well, they will tell you it's an easy decision. If I look back over my career, I've been lucky enough to work with some incredible people and to live and work in some amazing places around the world. From the sub-zero temperatures of the Northwest Territories in Canada, to the outback plains of the Pilbara and Northwest Queensland, to the challenges of Angola, a country recovering from decades of civil war. These experiences have shaped my fundamental beliefs, and I'd like to share a few of these with you today. First, I absolutely believe that mining can change people's lives for the better. A great example was my time at the Akati Diamond Mine in Canada, where I saw employment, education and business opportunities that mining can bring when done in the right way. I also believe that to run our operations well, we must run them safely. My own experience with fatalities and seeing the tragic impact on families drives my commitment to eliminate all significant injuries to make sure everybody goes home safely. Thirdly, I enjoy getting in at the start and being part of building something new. I got this opportunity when I was at Cannington and Akati, as well as through the potash acquisitions and early developments in Saskatchewan. And lastly, I don't really like the status quo. I love leading and developing people and bringing about real change. I'm an absolute believer that you don't have to be the biggest to be the best. And tweaking the sausage factory holds no appeal for me. I want to be part of a team that moves the needle and makes a difference. These experiences gave me an insight into the type of company I wanted to be part of building, and I knew South32 was a once-in-a-lifetime opportunity to do this. We decided early on that we wanted an inclusive culture, where the creation of our identity and brand would be defined by our people. We wanted the different perspectives of all of our employees, from our aluminium smelters in Africa to our manganese mines in Australia, knowing that together we're better. Starting with our values of care, trust, togetherness and excellence that sit at the heart of what it means to be South32. These values weren't written and handed down by me or the Exco. They were developed by our people and they guide every decision we make. The idea for our name also came from one of our employees. Their suggestion was to use a line of latitude, the 32nd parallel south, to link all of our regions and employees together. I've been told that our name sounds like a high-end vodka brand, the name of a nightclub, or even, as one of my best friends commented, a bus route. And as far as company names goes, it is a little different, and that was intentional, and I'm okay with being a little different. For us, the name honours our heritage, but doesn't limit us in time to seek new opportunities around the world. From the start, we had high-quality operations and great people, but there would be a degree of juggling the old and the new. Not many new companies have 80-odd years of history. We are proud of where we came from, but most of the systems and processes inherited from a large multinational were not going to be fit for purpose for a mid-tier mining company. So we've kept those that were right for us, and then we have built our own. We adopted a new way of working, starting by implementing our regional operating model. To delay the business and right-size our systems and processes, and for the first time, when we talk in places like South Africa to key stakeholders, we have one voice. We also developed a simple strategy to optimise the performance of our existing operations, to unlock the potential of their resources, and to identify new opportunities to grow. We had the building blocks of success: great people, high quality operations, right size systems and processes, and the right strategy. With this solid foundation, we were ready to stand on our own 2 feet. However, heading full pelt into the worst global commodity downturn in decades certainly wasn't part of the plan. But we had faith in our strategy and we stuck to it. In just 12 months, we've radically restructured our operations to reset the cost base. And we're on track to achieve controllable cost savings of $300 million US this year. We will also reduce capital expenditure by $218 million US in FY16. We remain focused on growing cash flow and not fixated on volumes. And we're demonstrating that even in the most difficult pricing environments, we can still generate cash. The reality is, prices have been worse than our low-case scenario ever envisaged. Yet, we have reduced net debt by $692 million US. We are now in a position of net cash. We maintained our credit rating and surprised a few doubters along the way. Our low financial gearing and operational leverage is a powerful combination, and for many investors, that provides enough excitement. Now to how we deploy our capital to create value for shareholders. We have a simple capital management framework that prioritises safe and reliable operations and an investment-grade credit rating through the cycle. Once we've met these priorities, we will distribute 40% of underlying earnings as dividends. Beyond this, we will create competition for capital. Our industry has had a poor track record deploying capital, and we are now seeing many mining companies forced to make decisions to repair their balance sheets. We have worked hard to get to where we are. We will be disciplined in our approach to deploying capital, and we will not blow up our balance sheet. I get asked a lot if we're open to external opportunities. The answer is, of course we are. And then follows the question, so what commodities are you interested in? Naturally, there are some commodities that are more attractive than others. For example, in thermal coal, due to lower demand and oversupply, we wouldn't be keen on acquiring anything new. At the other end of the scale, I think base metals such as copper, zinc, and nickel are very attractive. But there's the rub. Looking at the high prices recently paid for copper assets, it's difficult to see how value will be created for shareholders. So we look at all opportunities between the two bookends, and if we can't create value, we won't do it. Personally, I'm not convinced we're through the challenging price environment. I'm sure there is still more pain to come, so we can and will be patient. So at the moment, where are we at? Right now, I'd say we're a good company, and we're making progress to take South32 from good to great to outstanding. We are working smarter and focused on growing cash flow per share without compromising safety. We will come through this difficult pricing environment a stronger company. We've set ourselves ambitious targets to further optimise our business, and we're working hard to achieve these. We have the right teams in place to drive the change we need to fit the nature and scale of our business. But we can always do more. When our people come to work and we can guarantee their safety, when every employee is living our values, and when people want us to operate in their communities, we'll know we're heading in the right direction. When other companies benchmark against us, and when we are delivering superior returns to our shareholders, that's when I'll know we're outstanding. I look forward to updating you on our journey, and thank you for the opportunity today.
Now, Graham's agreed to take some questions, and we've got a couple of roving microphones around the room. So if you do have a question, would you please stand up, tell us your affiliation, and ask your question, preferably without a long speech.
Ian?
Gavin, I'll leave it to you.
My name is Tony Kerr from Gibson Crest Proprietary Limited. I'd like to thank you for your open and honest talk. I have an observation that 2/3 of your operations are joint ventures, and it's well known that operating in a joint venture is much more complicated and difficult than a normal operation. Could you please give us an idea of what sort of strategy you use to operate in these joint ventures? What sorts of changes do you envisage, and how you might terminate some joint ventures that are not growing and are very old?
Okay.
Thank you.
Tony, thank you for the question. And look, it's an interesting topic around joint ventures when you think of some of the recent events around, for example, Samarco. Look, from our perspective, we do have a range of joint ventures, of which there's only one where we're not really in control. So if you have a look at our manganese joint venture with Anglo, we've had a very good relationship for a long period of time, but it's actually South32 people who operate that business. It's our uniforms, it's our people, it's our systems, it's our processes, and we market 100% of the product. So I'm absolutely comfortable, A, with how it works, and B, our partner. Worsley's probably in a similar vein, as is Moselle, where we actually operate the day-to-day business. The area we probably don't operate, and the area we spend a bit of time focusing on over time, hopefully changing the dynamic, would be our aluminium/alumina bauxite business in South America with Alumar. You know, we have a different joint venture structure for the mine, the refinery and the smelter, which is temporarily closed, and that's one where we rely on other people to operate. The advantage we do have, we have some very good, well-established partners in those businesses, such as Alcoa in Rio and Vale. But again, it's probably the only one joint venture where we're not in control of the day-to-day activity, and we'd like to make sure over time we have in place the right structures and controls that we're absolutely comfortable. Yep, over.
Thank you. Graham, well done. This is Owen Hegarty here from EMR Capital, the new force in mining private equity.
Nice sales pitch. No.
So Graham, thank you very much for that. An outstanding speech here at the Melbourne Mining Club. Well done, and congratulations to you and your team on establishing South32 away from the apron string, so to speak, of BHP. So that must have been quite a scary experience, and well done with respect to having that newly liberated culture in the company. So, and no doubt that was part of the reason for the strong performance. The question is more to do with where to next in terms of diversity or diversification, if you like, away from those existing commodities, and you've got quite a wide spread of commodities there, and away from those existing countries or continents, and you've got quite a wide spread of those two. Or would alternatively you consider some sales of some of those assets type of thing? Thank you, Graham.
Okay. Owen, thank you, and a good challenging question with many parts. Look, the way I think about why we exist, it's quite simple: to create value for shareholders. And if you think about some of the fundamental thinking behind South32 when we set it up, and if you look back at some of the decisions the industry's made over the last 10 years, it's been a very poor allocator of capital. So we started life with a couple of basic founding principles. One is that we do believe in having a strong balance sheet. The second piece we believe in is focusing on value over volume. So when we think about acquisitions, when we think about the current mix of the portfolio and what we do with it, it's always through the lens of value and creating value for our shareholders. If we look at our assets today, it is important to understand, you know, one of the, if you like, unhelpful probably names we got when we sort of demerged from BHP Billiton for a while was, there was Spinco, there was Crapco, there was Shitco, there was a variety of different names that came with us. But I think people often forget that when we looked at the assets within BHP Billiton, there was absolutely the core that they kept. Then there was the assets that came to South32, and then there was a series of assets, if you like, that didn't come to South32, such as New Mexico Coal and Nickel West. So we were quite focused on the assets we took to South32. And if you think about our assets ourselves, we are absolutely diversified in terms of the different commodities we produce, the geographic location. And you know, one of the surprises to many analysts is that we only sell 7% of our product in terms of revenue to China. So we're actually quite diversified by revenue stream as well. But I think if you look at our commodities, you know, one of the advantage we had when we started to talk about our operations to investors was a lot of the investors didn't know our assets. They thought about them as short life. They thought about them as in terms of high costs. Yes, we have some challenges around grade decline at Cannington, and also places like Cerro Matoso. But if you look at Illawarra, you look at Worsley, you look at Energy Coal South Africa, we've got decades and decades of resource. If you look at today, you know, first half of last year, 80% of our revenue came from operations that are in the first and second quartile of the cost curve. So they're absolutely well positioned. So when we look at the portfolio today, I like our portfolio. I think it's a good mix. I do think we have a couple of assets that have been struggling over the last 6 months to generate cash, that being Illawarra and also Cerro Matoso in Colombia, which is a nickel operation. I think Illawarra, we've done lots of work around restructuring, and I'm comfortable about where the team's going to make that cash positive. I think Cerro Matoso is still a challenge for us: low nickel price, declining grade, and a high cost base. So, you know, that's one business we're focusing a lot on how we restructure. In terms about how we think about growth, I sort of used a comment around two ends of the scale. Thermal coal, no interest because we have some assets today, and I don't think the fundamental industry attractiveness suits us. I do like copper assets, for example, and other base metal assets, but we're not going to go and buy something that basically is hugely expensive and blows up our balance sheet and doesn't create value. I think when we think about anything that we added to the portfolio, and we'll come back to one caveat in a sec, anything we added to the portfolio, we will only do it if we can add value. And how do we add value? Through our regional model synergies, or we have some specific skills around things like open stoping at Cannington. But when we talk about what's the most important thing, what do we spend 95% of our time on at the moment in South32? It's optimising what we have and unlocking the resources, because we have a hell of a lot of resource that hasn't been a focus for the last almost decade to convert to reserve. So we've got to understand what our internal project pipeline looks like. We're going to continue to optimise our assets. And if we do those two things right, I've got no doubt we'll continue to grow the most important thing, which isn't the copper equivalent units or the tonnes or the widgets, it's actually the cash flow. And then we can have a look at external opportunities, but we don't feel like we have to do them. We think we have a good portfolio today and we can generate great returns for our shareholders. Yep.
Hi Richard, I'm Luke Rebecki from Melbourne Uni, and I just wanted to ask about how did the employees feel transitioning from BHP to South32, and what did you do to ensure to these employees that their job was safe?
Yep. Look, that's a loaded question on many fronts, but I'll maybe give you a little bit of background here. The majority of the operations that we inherited in South32, if you worked at Worsley or you worked at Cannington or you worked, for example, in Energy Coal South Africa, you went with the demerger, you didn't have a choice. So you're sort of starting from that position for some of our employees. When you look at the people that work at the corporate office, when you think of the people that joined the regional offices, they absolutely had a choice. So, you know, the people who sort of joined the region and the corporate centre, building a culture has been very easy because it's new, it's energetic, it's shiny, it's an opportunity to do things. When we look at our operations, I think the majority of our people in those operations would be absolutely proud of where they came from. You know, BHP Billiton has a great focus on safety, health, environment and community. You know, the values have been ingrained in that organisation for a long time, so people took a lot of pride in that. But I would say, you know, we're talking about the assets, if you like, that didn't really have their time in the sun. You know, they didn't get a lot of visits from the board or the CEO or senior management. They certainly had no growth money invested in them, and they certainly weren't the primary focus of the analysts or the media. So if you take somewhere like Worsley today, good operation, great people, all of a sudden, you know, they're a big part of South32, and their people like the fact that we talk about their business in a positive way. They like the fact that, you know, they get to make the news. They like the fact that they can feel they make a difference. So I think the culture's running well, and I think people are really excited about the change, but I would sort of put the caveat, I mean, obviously we've done a lot of work over the first 12 months to restructure the business. So to your question around job security, we were very clear from day one that, look, we would have to change this business, we would have to run this business in a different way. So there's been that little bit of uncertainty while we made some of the changes, but certainly the operational changes are way behind us now, and the culture in each of the businesses continues to grow.
Joe Kukutsa, Managing Director of Amira International. Thanks, Graham, for that insight on South32. As a shareholder, it's always good to hear some of these things. My question really relates to what your thoughts are or what your plans are in respect to the role of research and development and innovation in growing South32.
Yep. Look, from our perspective, you know, we have assets or operations that are quite old in terms of some of their length of lives. You know, they haven't really had a lot of capital spent on them in the last decade plus. We are looking continuously ways that we can sort of run our business smarter, and I could roll off a series of examples about where we're using drones to inspect tailings dams and do stockpile surveys, laser imaging and 3D printing to help us in design of certain things. So we're doing lots of work in that space, but we sort of push both of those functions, if you like, to the regions. So we have an Australian region and an African region, and both of those, if you like, planning and resource functions have really close ties to a number of universities where they're working on innovation and new ideas. And they're also touching some of the spaces, if you like, around how technology can really unlock things. So we absolutely have a commitment to pursuing that. I wouldn't expect us necessarily to be the front runner, but I would expect us to be a fast follower. But I think technology has a second side of the dimension where we actually see what's it meaning for our end markets. That's something we also closely monitor in terms of, what's happening with battery technology, what's happening with renewables, what does that mean for silver, for example, what does that mean for nickel, what does that mean for aluminium. So the world is constantly changing, we're going to be prepared to change with it and move fast.
Just about earned your keep. Thanks very much, Graham, and thanks for all those questions. I'd like to ask Lorraine Meldrum, CEO of Swan Global, to make her way to the stage for a vote of thanks.
Graham Kerr, in his role as CEO of South32, has delivered some remarkable results. The balance sheet is in good condition. Take the all-important net cash position, one of the best in the industry, despite what have been weak commodity prices. Another important item, the share price. It is well up on the recent past. So with Graham, we have seen performance and delivering of outcomes. Today has been no exception. He has delivered for all of us. So, ladies and gentlemen, please join me in thanking Graham